Let's talk to Hersh about a big brokerage call of the day. Neeraj pointed to this. Jefferies has come out with a note on the IT sector as a whole, and it's cut its target on TCS in a very big way by as much as 27%. But it's also given its picks in the IT space. Hersh, what are they saying?
Well, I'll talk about the rationale first because IT has been under pressure and it's a sector in focus. First, what Jefferies is saying is tariffs are going to hurt US GDP growth. That's really the key. Worsening business outlook to hurt new deal signings and discretionary spend. They're therefore cutting their FY 26-27 revenue estimates across the board by 1 to 5%. Margins too have limited scope for upside from here. One, you have cost takeout deals which have much lower margins in that sense. Lower demand is going to lead to a higher amount of competition and therefore will keep margins depressed. IT to increase dependency with regard to subcontractors, that will also keep margins in check, and US dollar is expected to weaken. All of these factors to play out negatively on margins likely. Worst hit sectors, manufacturing, logistics, retail and energy. On the back of crude prices falling, energy will be impacted. Rate cuts likely to also hurt BFSI. Communications, insurance, healthcare, slightly more insulated, those sectors is what Jefferies is saying. TechM, IKS and Sagility are the least impacted among that IT pack. TechM among the larger players, IKS as well as Sagility among the smaller ones, and there's limited upside until US outlook improves. They prefer an Infosys and a Coforge, but they've really cut their target price on TCS 4530 to 3300.
27% is the cut in the target price that Jefferies has on TCS. They say that they prefer, of course, Infi, Coforge and Sagility. Interesting. Mayuresh, what do you make of this? Because on the cusp of the earnings, very big cut. What are your own expectations of how are you penciling in the value for TCS right now?
No expectations, Alex. Very honestly, I think we'll wait out for numbers to see how the numbers come through, what the management is probably speaking and talking about in terms of the macro landscape. What are they looking at in terms of the internals as far as revenue growth is concerned, margins, the basic aspects that all analysts on the street probably look at. But no expectations at all going into IT results. We would just like to wait and watch. We would also like to wait out for IT results across the board, specifically in the United States. And we'll then take a call on what is to be done with the sector, because we'll get a complete holistic view in terms of how global players are also probably looking at the sector as well.